Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Monday, the 19th of December. Starting off the FTSE 100, where we've had some relief with the market bouncing off the 200-day moving average around 73.25, the low on Friday 73.05, and an end-of-day close back below Friday's low could risk a move further lower to the 72.75 area of the 50-day moving average, but takes a lot to break the 200-day line in one go, so let's see if we can consolidate at current levels. We do have a lot of support there, or did back in early November around the 200-day line area, so maybe we get away with this. Above the 200-day line, looking for a retest of 7,500 initially. It may be the case that we've got a rising trend channel from September heading towards 76.30, so let's see if that pans out. But at the moment, just really focused on 74.30, old support before last week's breakdown, and then 75.50 or so in the near term. On to the DAX, and that's sort of regrouped a little bit as well today, consolidating above the 50-day moving average at 13,742. Above that, looking to try and fill the gap up towards 14,500, but I think anything more than that at the moment would be rather ambitious. Moving on to Bitcoin, and here we've got the market having sort of deflected off the 50-day moving average. That was around 18,100. That area also the old June to November support area, so old support becoming new resistance. Risks a move down to 15,400 or 500, which is where we were back in mid-November. Worst case scenario, while we're below the 50-day line, down to the 14,000 area, maybe by the end of next month. Not normally good when you have an RSI fail in the low 50s, because that tends to be regarded as, or becomes, a bull trap signal. Moving on to the stocks of the day, and quite a few strange ones. First one is Checkit, where there's been a nice bear trap rebound from below November support at 15 pence. Sideways shuffle along the 50-day moving average last week and then breaking higher, which is tends to be what happens. Bullish divergence as well, so this stock got all the things that we like in terms of potential turnarounds. That top of that broadening triangle from August up to 30 pence, and we could see that by the end of next month, while there's no end of day close or break back below the 17 pence area, maybe allow for 16, just to be on the safe side. And another stock which is relatively obscure, but here we are today, is Ensilica. Here we've got that classic turnaround with the unfilled gap to the upside, sideways shuffle, and then another unfilled gap to the upside today. That suggests that even though this is obviously a very thin market and not for maybe all comers on this one, we could head up towards the 125, 130 area while we hold above the 80 pence zone, which was the resistance over the late November, early December period. But as I said, it's not for everyone. It's just more of a charting anomaly. On to Falcon Oil and Gas, and here great progress since the falling wedge break and the break of the 50-day moving average at 8.5 pence, sorry, 6.5 pence rather. Now we're on the 200-day line, and an end-of-day close above the 200-day moving average should take us up to 10 pence, which is basically the top of a broadening June triangle. But the main thing here is that the signals worked. We had bullish divergence, we had the falling wedge break, and the break of the 50-day moving average, which is now rising very well. So it looks as though something exciting will come forward from fog over the near term. Looking at Guild, and on a great chart, you can see that obviously near 3p, somebody decides to press the sell button whenever that happens, but at the moment we're at 1.3. Need to break 1.4 to get us a target up to the top of that November broadening triangle at 2 pence, maybe by the end of next month. Ideally, there's no price action now, back below recent 1.2 pence support. Ilika is the next contender, and here, early days, we've got bullish divergence though. We just need to break that 30 pence level on an end of day close basis, and we could be up to the bottom of that November gap and the 50-day moving average around 40 pence by the end of next month. So let's see if Ilika can come up with the goods. Another stock which is on the obscure side is LGB Media. Here we've had a gap through the 50-day moving average, sideways shuffle above the 50-day line, and the break of the initial resistance, the point there at 71 pence, above 71 pence, looking for a pound. which is the top of that broadening triangle from, sorry, the rising trend channel from back in September, and that will take us back to where the shares were in early September. So it's above 70, looking for £1 on LBG. Stock which is also relatively obscure, but maybe will become more famous now that it's starting to move. I think it was in the Daily Mail yesterday. Inspecs Group. Here we've got the shares. I suppose they're bumping along the bottom. Looks like we are still below that initial November support there, that support area, but clearance of recent resistance at 50 pence could take us up towards the 50-day moving average, now near 70 pence, and late November resistance for the share. So break of 50, looking for 70 on Inspecs, and ideally there's no move back below 40 pence. In the interim, we've also got bullish divergence, which gives us the confidence, perhaps, that a turnaround is finally on its way, helped along by our friends at the Daily Mail. Moving on to Oriole, which has been one of the best charts around. The reason for saying that is that we had a bear trap gap reversal from below 0.11 pence. We found support 3 times at the top of the gap at 0.12, and now we're breaking higher, looking for as high as 0.25 by the end of next month. And who knows, the way things are going, could even be by the end of this month. But that bear trap gap reversal, beautiful signal, as was the extended bullish divergence from back in June. There's a long line there that's backing the upside or the recovery at Oriole. One of the stocks that been hit rather hard last week, and actually before last week, was Powerhouse Energy. Just the first signs that the shares have found a line of support from quite a long time ago, actually, back in May last year. So that could be the floor of a falling trend channel. And that means that above Friday's support at 0.9, and that 0.8 to 0.9 area has been support for the shares back in October, where we could be looking at a move back towards the rising 50-day moving average at 1.4 pence by the end of next month. But certainly a rather volatile situation, and it could be the case that if you're a cautious trader, you'd want to see the shares back above 1.2 pence and that resistance line there from October before deciding it was safe to go in. Moving along to Premier African, which has been what's always a very followed stock, but we had the rug pull last week. It looks like the rug pull is over, though, finding support at old resistance around 0.41, which I think I said last week. End of day close above the 50-day moving average at 0.49 should be enough to take the shares at least back to where they were at the beginning of the month, 0.57, hopefully by the end of this month. And it does look as though that move there was certainly a shakeout, which may then deliver further fresh upside now that the weak hands have been removed. Moving on to Sareum and another of today's better situations. Here we've got the classic combo, bullish divergence and a falling wedge break. In this case, the break level was around 72 pence. Above that, we're looking for the shares to try and fill the gap up to £1.34. If you're not quite so ambitious, maybe £1.10 at the 50-day moving average would be the initial target on Sareum. But good to see the shares turn round back on Friday after rather a miserable run. Just a couple of stocks to go now. First one is ValirX, which last week decided to retest the main support, not only retest the main support around the 10.5 pence level, but actually go below 10 pence. So that might have once again cleared out the weak hands, shaken a few people out. The view now is that while we're above the 11 pence area, which is that support line there from July, we could head up towards 14 or 15 pence to fill that gap from the earlier in the month. So maybe we see that filled by the end of this month. Finishing off with Xtract Resources, which has just had some news out from Ascot. Here you can see that there's just the glimmers of bullish divergence, just a glimmer of a break of that falling wedge from the end of last month. If we can hold above 2 pence, then we could head back to support on the way down, 2.4 pence, maybe over the next 2 to 4 weeks. That's it for me today. More updates tomorrow.